following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials up 500 points. NASDAQ up 130. S&P's up 80. Gold contract down to $9.50, trading at $13.27 an ounce. Silver down 8 cents, $16.59 an ounce. Copper down a penny at $3.20 a pound. Light sweet crude off 71 cents, $63.44 a barrel. Notes. 10-year note up 4 ticks, 121.13. 30-year bond up 9 ticks, 145.31. King dollar up 30 ticks, 89.445. The euro is trading at 123, just about 124 to the U.S. dollar. The yen is at 109.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of these markets, what you have is this. We have the Dow up just about 2%. NASDAQ is up just about 2% also. Spread-wise out here, it's been an incredible day, no doubt. Incredible couple days. Spread-wise, what we've had is this. You've had the spread inside the Dow Industrials, the low out there, 23,778. The high, 24,852. So you are talking some numbers here. We're talking about over a 900-point spread. If we go over and take a look at the SPY, what you're going to see inside the SPY, same type of setup, meaning you've had a low of 258. Since when you ever see the SPY move 10 points? Bottom line, you're at 268. Big number. And, of course, we came off the high. The high that we're talking about is the high that was generated on the 29th of January. It was 286. You made a high with 90 million shares. Market blows apart. First day, meaning last Thursday, has 173 million. Goes from 280 to 275. Yesterday, we go from 275 to 263. You do 294 million. And what we're going to do higher than 294 million out here today. So what you're going to have, bottom line, you're going to have some monster volume on the way down. You can expect that, yeah, you're going to go sideways. You're going to get a counter trend bounce. Bottom line, bounce with lighter volume. And that very well can be the B to a C of a very, very large ABC structure on the way down. Because what we have done, folks, is that when you break a trend with conviction, which we've done in spades, bottom line is that there's no reason that this can't go back to the beginning where this started on a non-stop basis, which was on September and August of this year. That's when the Qs went from a price point of $140 and just didn't stop going up to 170. You can take all the charts are set up the same way, meaning that you broke that 6-month deal and you broke it convincingly. Gold contract. What do we have with gold? Gold contract right here now is trading at a price point of $13.26. You're down $970. You have volume of 440,000. Bottom line, you're still going into 500,000, 509. What you do have, so this is going to be a big one because bottom line is that, as I said in the update, you've got a last engulfing that's happening, and we'll see whether it can get any traction out here tomorrow. When we take a look at the few of the equities don't look bad. When I look at the dollar, dollar index still is operating as it has since a year ago, January. That means each and every time you get any type of bounce, it gets sold off fast, furious, all of the above. We hit 89,920 out here today. Bottom line, they sold it down, man. They sold it down quick. We hit that this morning at 8 o'clock. It stayed up there until approximately 11 o'clock and then gave it up. That's the bottom line. It went south, and it went south in spades. We go take a look at the GDX. GDX out here. GDX is trading back 55 cents, and you're coming into the strength from the bottom. The strength from the bottom, the high is $22.31. Bottom line, you're coming into it with a lot of lighter volume, but what you do want to see is that you'd love to see this close today at $22.31 or bigger, because what you would have there then is this. We came off the bottom on the 13th of December. The low of that is 21.42. We had volume of 82 million. If you do not reject this today, you'll go down to the low of that. Now, we have lighter volume, but that's kind of how it sets up. If you reject it, then guess what? Field day, big time. We put this on a weekly basis, and what you have on the weekly basis, bottom line is that we're coming into 219 million. Okay, that's the week of the December 15th. Thus far, we've done 94. So what we do have is that today, that's only Tuesday, so that's a lot of volume there. So you want to be cognizant of that number in a big way. Some of the higher volume stocks out here today, we have Bank of America up 79 cents. You get Micron Tech up 4. Microsoft is up 2. You have Facebook up 2. We have JP Morgan up 2. Let's go over a couple of the banks. We'll take a look at JP Morgan. So JP Morgan out here, yesterday you get down into 103. Big juice today. You're at 111. That's resilient, man. That thing came back fast and furious. It's not going to stop an ABC structure on the way down, but that, no doubt, is fast and furious. We take a look at Bank of America, BAC, same setup. Bank of America does have the same setup. Bonds. Let's go to bonds. Okay, so bottom line is that first the 10-year. We take a look at this 10-year. 10-year, 121.11, and the 10-year is what, bottom line, had gone down in price, up in yield, broke down. You know, when we broke down, you broke down on the 29th. Well, actually, no, you broke down further than that. We broke down actually a couple weeks ago on the 29th. That being said, let me pull this 30 up for a second. I believe this 30 may have snuck back into the higher range. Not yet. Not yet. The 30 in the is like 149 and change to get back in that higher range. You stay right there, folks. We come right back. Dow Industrials right now up 376. NASDAQ is up 107. S&P is up 70. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
You've been looking at the market, listening to the news. You heard a huge amount about the volatility ETF structures, folks. Bottom line is that this turned into a disaster. There's no doubt for the folks that were into these trades. And this is what you had. Bottom line is that you had a situation, if we take a look at the XIV, so the XIV, of course, people have made money in a long period of time, basically having no volatility in the marketplace. But just so you can wrap your head around this, which is just pretty intense, is that the XIV, yesterday, bottom line, if we bring this up, what you're going to see is it was as high as $118 yesterday. The last Friday was $126. So you got it at $118. It closes out at $92. Bottom line, total wipeout. They opened it for a short second out here today. It looks to me like they just opened it to price the deal. I'm not sure. Well, I'll see if any shares actually went through. Bottom line, it went from $99 to $5.50. So it's a total wipeout. Now, that fund there was approximately $1.9 billion to $2.2 billion. So that money's lost. Where we're going to see repercussions is that inside the broker-dealer community, it's going to be picture if you're on margin on that, that's 100% loss. And the real question is going to be that a broker-dealer is they got to chase down the clients because the fact of the matter is that if you were on 50% margin, let's say you have 1,000 shares, you get 50,000 up, right? Bottom line, you have $5,000 this morning. Well, guess what? The broker-dealer has to cover it to the aspect of the Credit Suisse. So someone's going to be out that additional money. Let's go to Sam in Boston. Hey, Sam, what's going on?
Good.
How you doing, man?
Good, good. How are you?
Good, thanks. Good, good. What are we going to look at today?
JNUG.
Okay, let's take a look at it. We got the JNUG. This is the Direction 300% bold position of the junior miners. We take a look at this. Now, do you own this? You're looking to buy it? What are we doing?
Looking to buy.
Okay, so this is, bottom line, the small caps as well as the large caps, they're coming into the December 13th area. And December 13th, that was the last time we broke topside, folks, with strength. What I would do is this. I would wait until we see coming into this, do we get a rejection of lower price coming into this close, Sam? Because thus far, we have not. And if you don't get a rejection of lower price, what you'll see is that because we're into that bar, you can go to the bottom of that bar. And that's not guaranteed that'll hold either. But when you get into the bar, at least you have a pricing mechanism and a perception of where it may go. So the top of this bar is 14.55. The bottom of that bar, where the strength is 12.68. So I wouldn't bite on this just yet.
Okay, thank you.
Okay, have a great one. Have a safe one.
You too, thanks.
Thank you. So to get back to the volatility trade again, there's going to be a let me see what other ones S X V Y. I think is that one of them? No. S X. Well, I'll pull a few more of these up at the break. Bottom line is that big hits out there, big hits. Now, it's going to be intriguing because this morning I was leaving when I was listening to Bloomberg, you had plenty of folks turning around blaming the VIX product on the downdraft, and that's not it, folks. Okay, every one of these ETFs, when markets get sold down fast, have to sell. It's not like you and I deciding, okay, we have a stock that we like, we want to keep it, we'll take heat, whatever that is. It doesn't matter if we are bullish or bearish. What happens on the ETF structure is that they have the sponsor of the ETF. The sponsor of the ETF, okay, has to keep the net asset value going of the ETF. Well, the biggest ETFs out there are the SPY, the Qs, the IWM, and the diamonds. So when this acceleration was going downtown, what you had, watch, I'll bring up Apple, because Apple, of course, inside the NDX 100 is a monster, okay? So what you have is this. So what ends up happening, as Apple's barreling down yesterday from 163 to 156, simultaneously, the sponsor of the Qs had to sell Apple. Bottom line, it's that cut and dried. So bottom line, those downdrafts that you saw, that's how that goes. Now watch, this is where the chicken and the egg come, though, that is really bizarre. Just the opposite of that happens if someone's just selling Apple, then they got to sell the Qs. Someone's selling Microsoft, they got to sell the Qs. What ends up happening down there, it just keeps barreling, barreling, barreling. That's why you see when these downdrafts take place, they swift beyond belief. Now, the real key, one of the keys it's just as this turned today, okay, so you get a bounce going. As that turns, it's just the opposite. What ends up happening, they turn, okay, bottom line, you buy the IWM, you buy the Qs, you buy the diamonds, you buy the SPYs. The trustee of those ETFs got to go in the market and buy them. Same chicken-egg deal. What normally happens here when you get a downdraft that is as fast and severe is that bottom line, you're going to get a bounce, you're going to get a test of the low. The cool thing here is this. We have a couple of different things happening. We have a high volume low now, we're going to get a test of it. You have the bounce that I suspect is going to be coming. Maybe it's here. What you're going to see there is, well, if you got it on light volume, well, guess what? That's saying it's setting up the next leg down. When we take a look at actually where we are, if I take this and I put this back just like 3 years, what you're going to see is that you came right into the last time that we actually had volume on the way up. That would have been 265 in the SPY, and we got down to 263. And you're going to see that then it just died in the vine on the way up. Now the real danger here has to do with coming off the high with volume. You never like to see any equities, currencies, anything come off the high with volume. Because if you come off the high with volume, your probability goes much higher that you are going to have a much larger correction than normal. And in our case here, what has happened, because we haven't had a correction in so long, that'll just be a normal occurrence in a market that, you know, hasn't corrected. Bottom line, that doesn't change. If we go take a look at the 30-year, what you're going to see with the 30-year is this. 30-year right now is at 145.26. It looks to me like this 30-year is going to try to get back inside the range. And if it does, man, that's also would be a confirmation that we're going to have more volatility, we're going to have lower markets. The bonds are a big deal because the bonds, my take is that the bonds are what really spooked the market. Bottom line, you broke down, high rates, the market's freaking on high rates. We're going to be right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We go take a look at another, there's a lot of these VIX products. This one here, well, any of them that are basically with a long VIX product, they're definitely imploded. Here's another one, Beta Pro S&P VIX short term futures inverse ETF. Bottom line is that this yesterday, let's see, what price were we at yesterday? So it started out at $19.02, ended up at $12.39, and opened, let's see, what time did it? It opened at $2.49, and it looks like it just opened. Yeah, it opened at 220. Another bottom line, 90% wipeout. So these big numbers, no doubt about that. Big numbers. And let's go over to the IWM for a minute. So we get this IWM, which this is where the battle's going to come in once again in the ETF structure also, because what you have is that because Blackstone owns the larger ETFs, what they're doing out here today is that they're mixing and matching the aspect of leveraged ETFs versus just what the actual VIX is all about. I saw a couple press releases out here, and what it had is that they've been yapping about these leverage ETFs for a long period of time, and they brought the VIX into it. Bottom line, folks, they're not going to get away with that argument, because you can make the argument, as I just did a little bit earlier, it's the larger ETFs that when things are going south, they go south in a huge way. The ironic part about this is that when things are going up, that's one of the reasons things can go up on a continual basis too, little by little by little. But of course, you never hear anyone yapping about that. But that's how they work. The bottom line, that's how they work. They don't go up by themselves. They go up by somebody either buying the ETF or buying the underlying stock, and because the ETF is only a derivative off the cost of stocks. That's all they come down to. When they group them together, it makes a huge difference on the way up or on the way down, because it creates more demand on the way up and more supply on the way down. And when I say more demand and more supply, of course, that means people have to come in. But when people are coming in and things are just steady, then that's saying, hey, that's good. But it absolutely has to do with what are inside of these and how fast they have to actually sell them to stay at the net asset value. And if I bring this up right now, and they do a good job of it, you'll see this. The machines do a great job of this. Right now, I get the IWM. This is intraday. The IWM is trading at 149.84. Well, the net asset value right now is 149.57. And when you are trading these in a highly volatile market, you really want to pay attention to this, because when I show you this at the end of the day, they're going to get this close. So picture this. Right now, if you'd long the IWM, it's almost like, man, you actually have 60 cents. No, you have 22 cents more than you should have. So if you're day trading that, you want to be totally cognizant of that, because they're going to get that into the net asset value by the end of the day, within a penny or 2 pennies. The Qs, same setup. The Qs right now, look at that. See, they got the Qs right there. The Qs are 161.78. 161.88. Bottom line, the Qs are moving that quick. Now it's 161.87. The SPY, same way. SPY right now, net asset value, 268.60. You're at 268.75. So highly volatile markets, you want to wrap your head around that, because what you get, which is really cool, is that at the opens, if you take a look at where the net asset value is, as to where they are opening, you'll get a decent indication of how skewed they are. And of course, in this day and age, because we're not paying hardly anything for the execution of trades, if you can get a skew of 10 to 20 cents, that's a great skew. And of course, what you do there, when you do that type of trade, you're going to close it immediately, because you get a pre-market, you close it immediately, and you're looking that you've bought it undervalued. That's what you're actually looking for. And of course, when you're doing that, you basically are saying that, okay, by the time they open, that trend is going to stay with you for the open. That's what you're also looking for. Let's go take a look at, the king dog out here. Amazon, folks, almost didn't even get hit yesterday. It was pretty amazing watching this. Amazon got down to a low of 13.20. Closed at a price point of $13.90. Traded down to $13.51 today, and guess what? We're at $14.36. In Amazon's case, this is like a blurb. In fact, it might be an ABC up. That's how bizarre this is, because Amazon has a high volume high at $14.98. Google, different ball game. We take a look at Google. Now, Google was much weaker than Amazon, but Google has some problems in paradise. Google had gapped off the high, gapped off this 1176, opens down 1107, gets down into, if you want to see the last time with volume, Google just did it, got down right into it, meaning when it broke topside on the 27th of October. The problem with Google's going to have now is this. It didn't close the gap at 987. You got to 1,023. This gap will get closed because now what you have is this. You have a spike down into the base where it had some decent support, but that spike, the amount of juice that it came down with is way too much, meaning that if you come down with conviction and you come down hard, what you're doing is just like taking a hammer on a floor. You know, you hit it a few times, that's when it starts breaking apart. The first couple times just makes a dent. Second time makes a bigger dent. Then it flows open. Kind of wild how the whole thing does shake out. We go take a look at, let's go overseas and take a look at overseas. So last night overseas, which totally makes sense, is that we were down 4.5%. You had the Nikkei down 4.7. The Hang Seng was down 5. Bottom line, Shanghai was down 3.5. You had it all of the above. That went from Asia over to Europe. Europe closed, FTSE closed down 2.6%. DAX down 2.3%. Let's go over and take a look at the DAX right now. Because remember, these are one world markets, folks. Bottom line is that these money machines and machines go across markets like nothing. So what you're going to see inside the DAX bottom line also took a hit, and most of the hits right now. So the DAX is back to April of 2017. That's where, you know, that it took, bottom line, 2 weeks. 2 weeks to take back, April, we got May, June. Yeah, 8 months. 7 months. That's pretty intense. Will we take a look at the volume? Because this is where you're going to get a lot, you're going to get a lot of information out of Europe and a lot of information out of Asia. And what you're trying to do is you're just trying to match this up. So this is serious business. You know, inside the DAX, bottom line, next stop is 11,800. But with game is the, oh yeah. Once you get back, the DAX only needs a few more points to get back inside its lower range. Then you can make a case for 8,600, which 8,690, and we're at 12,000. Big number. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 583. You get the NASDAQ up 156. S&Ps are up 90 S&P points, folks. You're up 2.4 inside the Dow, 2.2 inside the NASDAQ. We get over to the commodity market. We take a look at some of those commodities. You get unleaded gas. That's getting less expensive for us. That's down 2%, trading $1.80 a gallon. You got heating oil, that's down 1.6. That is out there at $1.98 a gallon. Crude itself per barrel is down 1% at $63.53. Natural gas up 0.4%. That's trading out at $2.75. You have corn up 1.3% at $3.63 a bushel. Wheat up 1.3, $4.46 a bushel. Beans up 1.7, $9.86 a bushel. Let's go over to that wheat market for a second, because we want to watch these softs real closely because they've been getting killed forever. And the real question is that as the dollar gets into lower price, you'll see them basically should get more juice. That's the first part. The real second part is going to be, are we going to get inflation going? You know, not we, bottom line, that's the country as a whole. Is inflation going to get going? Because when you're taking a look at this, you're going to see last 6 months, we went from $5.09 a bushel, got down to $4.10. But the way this is setting up right now, it does look to me like, number one, it wants to go up to the highs of last week. That would be $4.58. Real question is going to be, can it launch that $4.58 area? And, you know, if it does, then bottom line is that you're going to basically, we're going to get higher prices. Let's do it this way. See if I can do it this way. There we go. I'll go long-term inside the wheat market. I'm going to put this on a continuous yeah, see? Okay. You know, in a continuous contract, this wheat's looking good. It's got a big base that started out here in July of 2016. You got a nice pop last week to 458. And, you know, there's not much in the way once you get to 462, which isn't that far from where we are in order to get to higher price. Some of the, let's go inside the Dow Industrials. So inside the Dow Industrials, of course, you know, bottom line, strength versus the weakness out here. Your strength, Boeing, largest price-weighted stocks. Remember that. So Boeing's putting 75 positive points in. Goldman's putting 60. Home Depot's putting 55. Apple's putting 44. Taken away from it, ExxonMobil. Exxon is taking 9 points away from it. Now, if you go over to Exxon, this is a classic, folks. This is absolutely a classic technical setup. And when you see supply versus demand, how the supply side won on this. So I'm going to bring this back 5 years first. Yeah, you can see it quite clearly in 5 years. So in 5 years, I get it on a weekly. You're going to see a high was out there generated on the 14th, 2014, $104. Oil started crashing. Exxon went from $104 down to $66 August of 2015. So it took approximately 1 year, 1 full year. 104, hit a low of 66. Did a nice counter trend bounce. In fact, it looks like it's almost a 0.618 bounce. Get up to 95. Now, this is where it got the trouble. I'm going to pull this back. I'll pull it a little bit closer so you can see it. I'm going to pull it in for 3 years. And what you're going to see is that you sold down. When you sold down, it sold down in July of 2016, monster volume. We sold down 93 to 86, 23 million shares. Did another counter trend bounce. Bottom line, sold off again. Well, when we were going up, folks, first we hit 18 million shares, then 25, and it was going into the 23, and the 25 is where it starts selling off, and it sold off, and it was vicious. This right now, I suspect we're at 78. It's going to go to the highs of the lows once again of 2015. And we'll find out. If it keeps accelerating like this, I suspect it's going to blow right through them. And then you have the aspect is this going to go after the $66 mark and test that high volume low that has been hanging out there since August of 2015. But that's the way it looks like it's setting up. Let's go over to Goldman Sachs. Goldman would just be the opposite, that it's doing that counter trend bounce. Remember something, Goldman, the number to watch at the end of the month is going to be 250.50. We got to 241.50. So Goldman, bottom line, is going to be able to basically, I suspect the volatility is going to continue, but I think Goldman also has a shot of actually getting a close under that I think it's 250.50, not 55. Yeah, no, it's 250.70. That's the number. That's the number to keep your eye on. Because what we had done, we had taken that area out, dramatically lighter volume. I believe it was, yeah, this on the monthly, it's 80 million to 227. And now what we've done, we've already done 21 million, and what is it, February 5th? So bottom line is that now we're going to have higher volume this month as you went downtown. So it's going to be a big heads up. And time-wise, what we have here is this. We're in a time area that these markets can stay choppy real easy, you know. You're talking, you know, well, I know it's still the winter up north, but before we know it, it's going to be the spring. And what does happen is that spring coming into the summer can turn into, I've seen some highly volatile markets. Normally, it starts around March, but guess what? We're here right now. Let's go take a look at Apple and see where Apple shook out. So Apple got to a low of 154. You're off the high with volume. Apple has big problems. Now you're going to hit the swings with big volume. So the real question is going to be 186 million. Yeah, it came down last week. So last week we came down at 262 million. That was the highest since going back to the week of September 16th of 2016 when it broke topside with the 390. So the way that's set up is that the 149, well, that's good. Okay, so 149 hasn't got hit yet. That's game. 149, 147 still game on Apple. And hasn't been hit yet, but that, I suspect we're going to do a B to a C on the way up. And if we're doing this B, if this is a large ABC structure on the way down, folks, what you're going to see, and you'll see very quickly, as it goes higher, you're going to get fast price movement. The volume will drop off dramatically. And then, once again, it'll come out of nowhere, shot across the bow, like, where is the selling coming from? You know, more than likely, something like this, it'll take a few weeks for this to set up, if in fact that's what we're setting up. We're going to take a look at the NASDAQ composite. Composite right here. We went from a price point of 68.24, and we've already dug into half of yesterday's loss. We close up here. That's what we've done. You know, that being said, you know, this NASDAQ can bounce all the way up to 73, 73. That's pretty intense. You stay right there, folks. We'll come right back. Dow Industrials up 460. NASDAQ is up 118. S&P's up 74. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. You know what's intriguing here, folks, is that, so if we go take a look at Bitcoin, what you're going to see is that Bitcoin right now trading out at a price point of 75.57. And what you had, of course, is that Bitcoin bubblicious, you know, comes off its high on December 18th. You know, now the S&P high was a long time after that. This is, you know, you're talking about January 29th. Right now, the Bitcoin, it hit 59.22, and right now you're trading out at 75.75. But what I expect people are going to watch is the aspect of Bitcoin correlations as to market correlations, and try to pick up whatever may be picked up out of this. You know, we know that certainly Bitcoin has nothing to do with a piece of stock, that's for sure. What does have to do with, though, is the psychology behind markets and the greed factor inside markets. And, of course, Bitcoin had it all. They had it all. Shoots up to the 19,511, and it's been a one-way trade since. Hit 59.22, and it looks to me like Bitcoin is 4,500 is going to be, looks to be game here. I had the support that it had here where it bounced. It traded there from the 2nd of November going over to the 17th. That's still, that base isn't a big base. The next base on the way down into the 4,000 area was alive a lot longer. And if that doesn't hold, then you're dealing with 2,000, 2,500. It's pretty intense, man. You know, let's go take, well, I guess next hour we'll go take a look at some of those blockchain companies that also imploded. You stay right there, folks. We'll be coming back with lots of numbers after the close. We are in earnings season. Dow Industrials are trading up 524. NASDAQ up 131. S&Ps are up 81. We'll come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best, but don't overdo. This is an important card. When you overdo, you deplete your body and you go against yourself, and it will take longer to accomplish your goal. Market-wise, let's take a look at it out here. We had the Dow Industrials up 567, NASDAQ up 148, S&P's up 81. Bottom line is that you just gained back approximately half the downdraft of yesterday. Dow Industrials up 2.3%. You get the NASDAQ up 2.1. S&P's up 1.4. So big numbers all across the market. If we go take a look at the SPY, what you're going to see with the SPY hit a low out here today of 258. You closed at 269. Monster volume, by the way, folks. You get 332 million. So this high volume low will get tested. The real kick is going to be now, do we go sideways? Do we try to get a little bit higher? Building a B to a C of a very large ABC structure on the way down, because we're talking about 286.43 is your A, and 258 is your B. So we are talking some numbers, what, 58, 68, 78, 88. Oh, my God. Yeah, you're talking about 28 points. or 280 S&P points. So bottom line, now when you take a look at this as to where you can do a bounce to, this will blow you. I mean, you know, ICE sets up at 279, which is another 10 points up there. That'd be a heck of a bounce, but that's where ICE does set up. NASDAQ up the NDX 100 up 236, 66.65. If we go over and we take a look at that NDX, what you're going to see, NDX out here, hit a low out here today of 63.70. You're at 66.65. So the NDX was almost up from highs to lows, 295 points. Yeah, monster move. The NDX had got back to the trading of the 22nd of November in about a heartbeat. Big numbers all across the board. Some of the news out here, this is really cool. Let's go just take a look at Tesla, TSLA. What you had with Tesla, this is going to be all over the news tonight, of course, is that we had SpaceX. Elon Musk, bottom line, had a successful launch this afternoon, not too long ago, of the new Falcon heavy rocket. This is a major milestone for that SpaceX in general. Bottom line is that had the rocket take off from Kennedy, right? So with fans gathered at Florida Space Center, millions watching on the webcast, the new rocket rumbled to life shortly after 3:45 local time. It cleared the launch pad without blowing up, a feat that Chief Executive Officer Musk said would signal a win, and continued an attempt to deliver its test payload into an Earth-Mars elliptical orbit around the Sun. Falcon Heavy is a large, reusable launch vehicle that will allow the closely held company to bid on heavier payloads than it can with the Falcon 9, such as large commercial satellites and national security missions. Following the launch, SpaceX did something never before seen in space history. It re-landed multiple rocket cores back on Earth, 2 touchdowns on land, and the plan for the third was for it to settle back on an unmanned drone ship in the Atlantic Ocean. The video feed on the drone ship cut out before the company could confirm whether it landed successfully. The Hawthorne-based company already has paying customers committed to flying with Falcon Heavy, including commercial satellite operators, according to the launch manifest. The U.S. Air Force has chosen Falcon Heavy for its STP-2, or Space Test Program 2 mission, though it still needs certification. The payload, this is where I'm going with this. This is pretty cool. The payload for Tuesday's maiden flight was Musk's cherry red Tesla Roadster sports car, outfitted with cameras to capture the views, a nearly indestructible disc carrying a digital copy of Isaac Asimov's science fiction book series Foundation. Foundation is also on board, plus a plaque engraved with 6,000 SpaceX employees. Pretty cool, man. No doubt about that. Let's go take a look at some of the earnings that were just coming out here. So if we go over to Akamai, AKAM, Akamai Technology, Akamai closed at $63.67. That $7.23. Let's see what Akamai has to say. Okay, earnings per share was 63 cents. The estimate was 63 cents. They made 69. Revenue estimate was $649 million. They made 666. So bottom line, they beat the top. They beat the bottom. This is really intriguing, too, because yesterday this only went down from 66 to 62. It's trying to close up the gap. It would have been much better if that thing could have closed the gap in one day. Bottom line, now let me put this back up again because I believe I said 67 it's trading at. Yeah, 67.23. And the high out here, so it's going to go after trying to test 56. That's how that's. Disney, let's go take a look at Disney. Disney closed at 106.17. That is trading 106.77, so that's up about 50 cents. It was up $1.47 today. The estimate, the earnings estimate was $1.61. They made $1.89. So bottom line is that they came in on the bottom side. On the top side, their revenue is shot. Revenue estimate was $15.44 billion. It came in at $15.35 billion. That's never good when that happens, folks. Disney is off its high of the 113. I don't expect that's going to hold because Disney looks like it wants to go after the $96 mark. $96 mark is the September 7th low. That's how that thing is shaking out. CMG, let's go take a look at this one. This one has had so many problems. This is Chipotle. That closed at $3.04, up $4. Right now, it's up an additional $5, trading $3.09. Numbers go like this. Estimate was $1.33. They made $1.55. Good for them. Finally did something. That is the revenue. That's the earnings per share. Let's see what the chart looks like. So, yeah, it's a mess. Don't touch it. $758, and you're dealing with $304. And you're still dealing with $270 as a high volume low. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Snap. So Snap closed out here today up 21 cents, trading $14.06. This is trading $17.54. You talk about catching a bid. That baby is up $3. Let's bring this back for a bit. 17. That's going to launch. Yep, that's going to launch all the way back to the base that's been built out here since July of 2017. Numbers go like this. Bottom line is that they beat on the active users. That's what the market's really going to dig, that's for sure. Revenue is $252 million. That was the estimate. They beat on that, $285 million. So bottom line is that they went up, and then on top of that, folks, you do have a 20% short position. So that basically aggravates the position when you're going topside. As you come over to our website at TFNN, folks, you are going to see right in the very front, Tiger's Den, open house all this month. What I'd love you to do, folks, come on over to the Tiger's Den. This is very unusual. We actually did this before. Tommy was setting this up before the market took that fast crash yesterday. Bottom line is that we have a great trading room. You can come in absolutely free. No credit card, no nothing. You get 30 days. You like it? Great. You can basically sign up. Check it out, though. This is active a good 14 hours a day during the trading week, and it gets active Sunday night. Bottom line, last night, of course, was pretty active even very early in the morning. So check it out. You just come over, you sign up, and you're going to be out here with all the Tigers and Tigresses. There's great information in there. There's great traders in there. And you know who else is also in there, folks? Our man, Mr. Andy Heck. Let's go over to our man, Mr. Andy Heck, who's due every Tuesday and Thursday. And don't forget, folks, Andy's got a great program right here, 5 to 6 o'clock Eastern Standard Time. He also has 2 newsletters. He has these Daily Essentials, which is a daily newsletter. He has the Technomental Commodity Report. You can come over, get either one of those or both of them with a 30-day money-back guarantee. When you do that, you are going to get the 12 essential lessons for trading commodities. We are on February now, pretty intense. Processing spreads. We are halfway through the year, I believe. 2, 4, oh my God, that's halfway through the year. Remember putting these up, too. Andy Heck, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
Crazy markets.
Yep. We got a market.
Markets.
We got a market now. That's the bottom line.
We got volatility, that's for sure. Listen, I wanted to mention that in my Daily Essential Equities report,
yes,
we actually went into this this crazy time with some VIX call options.
Yes.
And we took profits on those this morning. I think we bought them at around $2.20. We sold them out at around, on the opening this morning, around $6.50. So nice little hit there.
Intense.
To take advantage
of
the craziness. Yeah, a little craziness.
Huge.
And, you know, look, the stock market is back up, erased half of yesterday's losses. But in my opinion, this is nowhere near over.
Yeah, well, you know, we've seen this many times when and you get a sell-off. We haven't got a sell-off in 2 years. Bottom line, we'll find out whether we don't get another one for another 2 years. My take is that it's not over either. The thing that's so dangerous is that when you get these snapbacks and they're this quick, the bulls can make a good case that, hey, big deal, it's a snapback. You know what I'm saying?
Right. Yeah. Right, absolutely. But, yeah, we'll see. You know, I mean, a lot of volatility. We've seen a lot of risk-off action in markets. But crude oil held pretty well. I think we may get a delayed reaction to the downside in that one. You know, the things that have come up a lot.
The equities are getting killed, Andy. I mean, ExxonMobil's destroyed. Yeah.
Exactly.
Right.
And that's why I think that crude oil, you know, we're going to at least test that 62.58 level. We probably will test $60. We haven't traded below $60 in 2018. Maybe it's time to take a look at the 50s, the high 50s.
Yeah.
I don't think. Yeah. I you know, that's kind of my feeling here. Other commodities, copper holding pretty well, base metals holding pretty well. But if we do get another leg down, you got to be careful in some of these commodities because, you know, risk off, people sell everything.
Yes. Yeah.
So, you know, you just have to be a little cautious here, certainly. But the markets are crazy. It's good to see volatility. It makes for a better trading environment, no question.
Well, there's no doubt. There's no doubt. Natural gas. Where are we going with natural gas?
Oh, natural gas, man. I'm standing on the sidelines here, Tom. The EIA is going to release their numbers on Thursday. Market's expecting around 105 BCF withdrawal. Yeah. That's considerably lower than last year in the 5-year average. But we do have low stocks, almost 20% below last year's level. I think we're coming into an area of support, but this is a crazy commodity too. We have to remember that last February we made lows at 250, 220, and the March before that we got down to 160, 110. So,
and you know what's amazing is that like, I don't know how our winter is probably over in Florida, folks. Right now, it's like 79 degrees out.
But the groundhog saw his shadow, Tom.
I know. I'm just saying, when it's 79 degrees out here, what happens, I don't even have to ask what the weather is up the Northeast. It's probably about 45, because that's how it works. You know what I mean? If we get it warm, they're going to get it warm within a couple days when it gets this warm. So it's like...
That's true.
Hey.
It's lovely here, too, man. It's like, in the 70s, it's beautiful. And in California, it's in the 80s. So, basically, spring is just around the corner, even if we get... Listen... you lived in Boston your whole life. I lived in New York. We know that March can be a brutal month.
Oh, yeah.
Yeah. You could get some real cold snaps. But, as far as natural gas is concerned right now, this thing has been, since it traded at almost 326 on January 30th, it's been a one-way train down.
Yeah, pretty intense.
So,
no doubt.
And talking about trains down, digital currencies, Tom.
Yeah.
We'll pop that balloon, huh?
Yep, there's no doubt. And
19,000 to 6,000.
Right. We actually hit the 59.22 today, folks.
Yeah.
And that was in Bitcoin. And if you look at Ripple, Ripple bottom line is trading at 75 cents right now. Ethereum's at $784. Litecoin's at 142. And if I look at Ripple for a second, watch this.
Well, I started looking at Ripple, my son bought some Ripple back in October. Yep. It was 22 cents. It's still appreciably higher.
Oh yeah, no,
but it got the $3.
It got the 331, right?
Crazy numbers. Listen, stocks go up and down. We get 6%. We get these big moves. These things move 40%.
What I found intriguing out here today, Andy and folks, was the central bank structure, is getting really concerned about Bitcoin now. And that's telling me that this thing's getting realer and realer for them. Do you know what I mean?
We're having these Senate Banking Committee meetings this week on Bitcoin, on regulation.
Yeah, well, this is in Basel, which is, the world deal, right? Same deal, though. What he came out and said, hey, listen, man, all the central banks, the heads up, you better wrap your head around this. Here's his quote. This is for all you gold bugs out there, and including me and Andy and everyone else. Not that we're, I like gold, but this quote here, you're gonna crack up about. He was explaining that you got to watch out about Bitcoin because we have to safeguard real money. And I heard that real money. I'm saying to myself, fiat money's real money? Really?
Who said that? Who said that?
The head of the Basel. Out there.
Okay.
Yeah, real money. What's the definition of real? Stay right there, folks.
Vested interest,
We're coming right back.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished up 567, NASDAQ up 148, S&P's up 83. If you were basically out of the country for a couple of days and you took a look at the SPY and just looked at the price, bottom line is that you wouldn't feel as bad as that if you're actually in the market. Yeah, it's at 269 versus 286. With that 269, we were also trading that on January 2nd, too. So bottom line is that it's all relative as to where you are inside the marketplace and looking at either markets day to day. Talking with our man, Mr. Andy Hecht, we're talking markets, we're talking commodities, and I just got a text from one of our buddies, Andy, and he's saying, I get to get the exact one. It was like, where is the inflation? The inflation is raging. I told him I'm going to put you on the spot. 1 second. Okay, so, yeah. Why isn't gold higher? Inflation's roaring.
Gold is doing okay. I mean, look at where we came from in the middle of December. You know, go in an old risk-off environment. Look back in 1987 when we had that big stock market washout, what gold did. Look at it. Gold held pretty well here. You know, I suspect we get a delayed reaction in gold and silver to all this. I do believe we do have inflationary pressures in the markets.
Yeah.
And I think I've been a scaled-down buyer very gingerly because I am, you know, I have seen risk off before. Sure. I think gold is going to do very well. I think we're gonna take out those 2016 highs in the months ahead.
Yeah. No, listen, I like the trade, and I like the trade too. I answered him. I answered him saying it's going to all come at once, and that's
it's going to be. You got to be there, and you got to take some pain. Look, for example, I bought these VIX options in the daily essential equities months ago. And I had bought them, and then I rolled them once.
Okay.
And that's why the premium went. You know, you have to be set for these big events, and then you have to strike and take your profits when they occur.
There's no doubt.
But, you know, gold, I look at it the same way. Silver, I've been, you know, scaled down buyer of silver here on this weakness. I did sell a little when it broke out above 1750. I'm buying back what I had sold. I think the markets are set up nicely here for gold and silver. The bottom line is that comment about real money.
Yeah.
Real money is in metal form.
There's no doubt. Listen, and when you go with the inflation too, this is what's going to be so intriguing, folks. Okay, because the bottom line with inflation, you know, that's going to be your houses. You know, so inflation. If you ever went around for the last one, let me tell you something, man. You think houses have gone up? If we hit inflation, you're going to see houses go through the roof in about 2 seconds, and it's pretty intense.
Absolutely. And I think again, so Thursday. Unfortunately, I won't be with you Thursday, Tom. I'm going out of town. I've got to go to California later this week. But Thursday, World Agricultural Supply and Demand Estimates report, and Groundhog Day was February 2nd. That tells us spring's coming. Pitches and catches report next week. Those seeds are going in the ground. If Mother Nature does not cooperate this year, you're going to see food inflation, because watch out. Let's just go through these grain markets for a minute, because it's important when it comes to inflation. 2 years ago, listen, we had the last big move up in grains in 2012 when we had a drought. Soybeans and corn went to all-time highs. Soybeans almost to $18 a bushel, corn to like $8.40 a bushel. All right. And
right now, soybeans, folks, are trading out at
less than
$9.86. Yeah.
Right. And corn $3.60. Right?
Soybeans had a good day today. It looks like soybeans look like they're going to go back up to $10 here.
I like soybeans. I like corn. I like wheat here. The bottom line is, 2 years ago, we had a little bit of a scare over palm oil. These things all went up. Okay. But when the weather was good, they came back down. Last year, we had a little scare in the Dakotas and Montana, a drought scare. Didn't really pan out. Prices came back down. When this drought or when a crop disease or when something reduces crop yields, the world has become so addicted to bumper crops, we are going to see the prices scream. You're not going to see soybeans in the teens. You're going to see soybeans in the 20s. You're going to see corn up at above $10 a bushel. And if that happens, the inflationary data is going to catch fire. And that is why I think these agricultural markets are so important. The downside's limited here, but the upside's potentially explosive, Tom.
Yeah. Now let's go over. We just got
oil inventory.
Oil. This
is big today.
Yeah. Let's go take a look at oil. So this is the API, folks. Let's see what they're saying. So, okay, we have. Crude stocks fell 1.05 million last week. Cushing was down 633,000 barrels. Gasoline down 227,000. Distillates was up 455. Look at that, man. No one needs heating oil. Holy cow. That's up
455,000 barrels, right?
Then that's million, I think. There's an M beside that one. It can't be, right?
It shouldn't be. Let me see. 4.55 million barrels.
That's what it is. That's insane.
Wow. And they were up.
Yeah.
4.5.
That's a plus.
Bearish.
Yeah.
Bearish for crude.
Yeah. That's intense, man.
Yeah, that's intense.
That's
bearish for crude.
Yeah.
And look, I'm expecting crude to come off here. I really am. I mean, crude from June 21st, Tom, 58.5% rally.
Right. Right.
It's a big move, you know.
Oh, comes down
to $59, $58 a barrel. The market get a little too charged up here on the bullish side on crude oil, and nothing deflates crude oil like a lower stock market.
Oh, listen, all we have to do, if you go over to ExxonMobil, folks, and I'll show you something. Exxon just went in 5 days from $89 to $78.
Boom.
And if you look at Exxon, you want to see something? When oil was trading at its highs, Exxon and Chevron in 2014 were the first ones to come off the highs before oil charged down.
That's right. And listen, look, if you're sitting in Riyadh, Saudi Arabia, and looking at this IPO, this week has not been a good week for you.
Yeah. Intense.
And it might get worse if crude oil starts moving to the downside.
Oh, it does, man. You know, this
it's a lot uglier.
There's no doubt. The Exxon chart is an ugly-looking chart. And, you know, and never mind just having a lot of oil, bottom line, folks, is that if this warm weather stays even another couple of weeks, that does
That's
it,
also
right?
bearish. Hey, look at the XLE. That looks pretty ugly as well.
Oh, yeah. Yep.
Yeah. I don't like the action there. That thing has dropped about $6, you know?
Yeah, look at that, man.
So, yeah. So look, And like I said at the beginning, Tom, I don't think that this corrective period is over. I think that we're going to be, it's going to be a very fear and greed time in markets. Take those profits, folks, when they're on the table, and be very, very cautious. And then when it comes to commodities, buy the ones that are near the lows. They're not going to have the selling pressure. You know, avoid copper, avoid crude oil. But stuff like sugar and coffee, that stuff is interesting down here because it doesn't have the same bullish fervor. And with gold and silver, be very cautious on the downside. You know, I'm a buyer, but I'm leaving plenty of room just in case we get some big risk off.
And right here at TFNN, folks, 20 minutes from now, you can listen to Andy no matter where you're listening right now. Remember, just go on your cell phone, TFNN.com, hit Tiger TV, or go to YouTube. Just hit TFNN at YouTube. You subscribe, every program's right there. Andy, have a great one, safe one. We look forward to the show in 20 minutes.
Thank you, Tom.
Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow finished up 567, NASDAQ up 148, S&P's up 87. You want a little fact out here, folks? You're going to love this one. So, you know, we're talking about the volatility and non-volatility. Well, if we take a look at 54 trading days leading up to November 27th, leading up to last Thanksgiving, right? We did not have one day of the S&P moving, S&P 500 moving 1%. Not one day. Do you know what we had today, folks? It moved 20 different times 1% in alternating directions. 20, 20, yeah. Volatility is here and here in spades. Now, as you come over to our website at TFNN out here today, and all you folks that are already in the Tigers Den, you know, please tell all your friends, because the bottom line is that we have opened the Tigers Den. This is an open house. What that means specifically, that's our trading room. A lot of great traders in there, a lot of great information in there, open 24 hours a day. Next 30 days, folks, it's free. No credit card. Just come on over, go in. We want you to basically get in there and growl and prowl. You like it, guess next month you can make a decision whether you want to stay or not. Let's go to our man Al in Tampa. Hey, Al, what's going on, brother?
Not much. Still waiting. I got a decision back from the VA. They went ahead and remanded it back for the sixth time. It's been 11 years, 11 months, and 7 days for my case. You believe that?
Man, I wish you were in Boston. The reason I wasn't here yesterday, I was with some guys I went in the Marines with, and they just happened to be visiting down in Fort Myers, and I had to go down there and talk to them. But yeah, I wish you were in Boston. I could get you hooked up with someone. But bottom line is that, yeah, yeah, you cut out in me. Sorry, man. Say that again?
Yeah.
Oh.
I said I have a good attorney in Rhode Island, Chisholm, and Kilpatrick, and they're doing fantastic.
Good.
They won my case at the Court of Appeals. But I can't believe you on Lumber Liquidators. It did 100% retracement of that huge move up.
Yeah.
It came all the way back. I just couldn't believe it. But I got into Freeport McMoran back in December, the copper company. I'm just wondering where that might be going.
Okay, so let's take a look at it. It's FCX, Freeport McMoran. Now, Freeport McMoran, folks, is one of the largest copper companies as well as gold companies in the world. Big number out here. The low is $11. The high is $20. When we take a look at this fundamentally, what you're looking at, this company takes in $18 billion a year. They're pushing $4.5 billion a quarter. So this had a heck of a run. You know, today is a great day for you. I didn't think this thing was going to basically turn out here today. It turned nice. Okay, it's in the middle of nowhere land though, and you have to know that. You know, when this took off, folks, it took off from $13.81 in December, went straight up to $20. Now, that's always great on the way up, but when you retest on the way back, it can be turned into, you know, get danger. So what it looks like we had happen here, which is dynamite for you, is that the highs of 2017 is what's helping you out, as well as the downdraft of, let's see, July of 2015. You know, that's where it basically, the buyer came back in. So, you know, when this thing moves, it moves, and it moves really good. I mean, you could have an ABC structure on the way up now. That's how this is shaking out.
Well, copper is getting high. It's getting higher prices, aren't they?
Copper's moved. What has happened is this. When Freeport McMoran was moving, actually, when let's pull up the copper contract. Copper, folks, was the first commodity to actually start moving, and percentage-wise, it was a big move. So copper had a nice move today. We went from 316 to 321. HG, I'm going to put this on a continuous contract so you can take a look at this on a larger basis. And on a larger basis, bring this back a couple years, you broke over the highs and the large base that we had that was established since December of 2014. That's a big number. You're trying to break over now. This is where it's going to be. This is the big number now. What you're trying to do right now is get through the supply line. And this is a vicious supply line, meaning there's a supply line that goes back from 2006 all the way over to 2013. That being said, though, it's pushing into a pretty good. And if this can get into, if copper can get into 339 to 340, you're going to see some big action. Little by little, it's getting supply line is. It's a monster, man. So
how high do you think?
Right now, I think it's going to make a run again for the 339 to 344. I think the game is on there. You know.
Okay. Well, that's something I'll be looking at, and also the stock.
Oh, that'll help the stock. Let me go look at SCCO. So SCCO is the biggest, just pure copper play in the world. This is Southern Copper. So Southern Copper caught itself today too. Low of 46. You're at 48. Now this is at all-time highs. This is already busted through, and it had a nice bust through this 47. Gave it up. Now it's going to go after it again. You know. What you have here, though, is that I really want to see a lot more volume on the monthly basis. But you can see the further you get away from the 49 point and SCCO, that bigger the expansion could actually take place inside of the copper contract itself. You know, so I like the idea of how copper went number one just in itself. But what it did do, it started dragging up gold, silver, and now it looks like, as even Andy and I were just talking, you know, these softs look good. And if the softs look good, folks, this brings you back to the U.S. dollar. That means that the dollar is going to keep basically coming down. And if we get all that happening simultaneously, guess what? We have a commodity bull on our hands. If you get a commodity bull, it's a lot of fun, folks. That's the bottom line.
Thank you very much, Tom.
Okay, man. You have a great one. Have a safe.
Bye.
Thanks. Take a look at some of the higher volume stocks out here today, folks. What you had, you had Bank of America up 94 cents. We had Apple up 6.54. You had Microsoft up 3.33. Cisco is up $1.39. Exxon down 1.37. The Exxon's a big heads up. Why, folks? Because the market had a huge bounce. Exxon couldn't go anywhere but downtown. Let's go take a look at Chevron. Chevron got a bounce, and Exxon couldn't. You know, Exxon has trouble in paradise, man. And I suspect, let's take a look at the oil contract. That's telling me the oil contract itself, though, is going to go south. So if we pull up crude's $63.82 right now. And let's see, okay, so crude right now is pushing into the bottom end of a consolidation, which is 62.78, and you're pushing with volume. Yeah, crude can get back to 58. That's what Andy was saying, too. You stay right there, folks. We're going to be coming right back with some more numbers. Bottom line, SNAP. Snap come out with numbers. Snap closed. This is a Snapchat now. Snap closed, I believe, at 14. It's trading about 17. Yeah, it's trading 17.14. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. If we go over to Snapchat, Snap closed at $14.06. This is an equity that has a low for the year of $11, a high at $29. It does have a 20% short position. If we take a look at when this went IPO, this went IPO at $17 March 1st of 2017. But guess what? You're back at the $17 price point. 1705. Not you wouldn't have got it at that point that day, meaning that they sold it out higher. But bottom line is, it's going to be intriguing. Why? Because this Snap did come up with some revenue. Their revenue topped analyst estimates. Let's see how much they come up with. Okay, fourth quarter sales jumped 72%, 72% to $285 million. Beating the $252 million that was projected. So that is one big number. There's no doubt about that. What also happened is that the daily users also went up 18% year over year. Right now, they have 187 million daily users. So that's going to start getting some attention. Bottom line, what I expect people are actually going to look at, they look at, if you remember when Facebook, bottom line, was going from the computer to mobile, no one actually thought that they could accelerate their sales so dramatically. And the bottom line, they did. I'm not a big supporter of basically advertising on Facebook, because I think it doesn't work. But bottom line is that doesn't matter. They are printing money left over right. The company, they was expecting a 16-cent loss. Now they're down to 13-cent loss. So bottom line, they're still burning through some big money. And when I say big money burning through, you want to hear the big money, folks? This is like sick. $3.45 billion. That's their first year loss. Yeah, they better have some cash. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 9 o'clock. Stay right there. Man, there's Andy Hicks. Come right up. Bam! Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.